My name is Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. Here's your weekly technical analysis of LME 3-month lead and tin. I'll start with LME 3-month lead. I was away last week at the Commodities Week conference online, which is why I did not update my weekly commentary last week. However, yet again, and I know I repeat it each time I speak here, but it's nice to see on this daily chart, the market's still keeping within the May to October 2020 bullish shift pitchfork. This time between the middle time, currently at 21.52, and the upper time, currently at 23.22. The features continue to be there, but they are a tad boring, as the market keeps within a seemingly narrow range with some bearish pressure on top. The base of the action is just under the middle time now, around the 50% Fibonacci line of the big February 2018 to March 2020 move at 21.27. Interestingly, the cycle of moves up and down, are almost sine wave-like, with a range of about 7 to 8 working days. That's working days, not calendar days. Today we're just past the peak and seemingly heading lower. The top side has been capped with decreasing highs by the 50% Fibonacci line of the June to October 2018 move. All the action since April has elements of a very large bull flag type action, but for the moment I will lay off forcing that issue or calculating a move up, but it would be up in the 2380s, I'm sure. Now, just to be clear, I mentioned last time two possible patterns. They are both bullish. The first is the one I've spoken about in preceding weeks, a cup with handle pattern. Second is a bullish halfway hesitation, not dissimilar to the bull flag type action detailed at the start here today. Let's take another look at these two, their merits and opportunities. The action over late February to date looks promising as a bullish cup with handle pattern. The only issue is the excessive high and recently the wide action over the last few weeks. It would have been preferable to have a narrow action and kept the height in the 2185 area, but never mind. If the market should break higher through the previous high and especially the upper time, then we may have a target X in the 2351 area. Second is a bullish halfway hesitation pattern. This would see one leg already created in the action since the 10th of May being the hesitation. The question is, where do you measure the first leg from? I would suggest two possible points, the late April dip down to 2000 or the late March low in a 1915 area. The first would be a move up of about $260, the second would be a move up of about $345. I'm not sure of either as yet, but that would be the size of it should it happen. Of course, you cannot measure the move until you have a confirmed move higher. For this, I would still say clear and consecutive closes over the 50% Fibonacci line at 22.21, which has been capping the market. I have to stress it is still early on yet, though we are moving on nicely, and there are lots of obstacles in the way higher, but that's what I can see right now. LME 3-month tin. The move back up, which started some 14 weeks ago, translated to a higher level some 7 weeks ago when it moved up in between the middle time below, currently at 30.005, and the upper time above, currently 32.385, and that's of the January to March bullish shift pitchfork. This ties in nicely with a point I made 5 weeks ago. It is an overtly bullish one, and as I said at the time, and I quote, and a little bit out there, end of quote. So, if we looked at the November 2020 to late February 2021 action as one leg of a possible type of bullish halfway hesitation, as I said at the time, this is well out there. Anyway, if we were to be that case, then we could be looking topside at a potential target in the 31.250 area. Now, when I floated this idea 5 weeks ago, I kept repeating that it was a little bit out there, but I still drew a target X for it anyway. See today that this move up has become, well, positively mainstream. Tuesday last week the market reached it and exceeded it since. However, as I also pointed out in this move up, we were in fairly free territory overhead, at least until we really started hitting overhead congestion from around about 32.100 onwards. It stretches up to about 32.665 with a further level at 32.985 and 33.475. Hence I'm not wholly surprised to see a pullback today, likely in anticipation of the overhead resistance. One thing to remember though, we are still within, and nicely within, the same bullish shift pitchfork that has moved us up from the 23,000 area up to where we are now, and until this pitchfork is broken or amended, then it still governs the bullish incentive. Thank you for listening. This weekly broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final bit.